Alrighty, we are recording here, part 2 of marking up a chart. So here, yesterday, we talked about trend lines, we talked about supply-demand kind of areas, we talked about highs and lows, and why they may be. You'll also notice, for example, like come on, there it goes. You'll notice I've got this demand area here, but it also coincides, typically, very common, with a low. And we'll also see same thing up here. We've got a supply area coinciding with a high. So yesterday I was mentioning about the fact that a lot of these markups are the same thing. That one person does it this way, another person does it another way. Somebody marks supply and demand, another person marks highs and lows, and they're the same thing. They're just looked at a little bit differently, and we just kind of want to watch for that kind of stuff. Same thing here in this supply or demand area right here. There's a low. There's a line in here representing the low. We see these kind of things overlap all the time. I want to point out, let's just back out of this a little bit. See this trend line right here. Notice how many touch points. And the one final thought about a trend line is the more touch points as far as rejections, not just crossings, but here, 1, 2, 3, 4, 5, 6, 7, 8, blah, 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 blah. That means that is a very strong trend line. And that means that the odds of the algos spotting it are greater. Here we've got a trend line that I marked from here to here. And you can see as we go backwards here, you say, well, what happened here? It's not really touching it. But see how it chopped? It kind of came down to this area, came up, crossed it, came back. That trend line's in the middle of this chop. And so trend lines are very, very powerful in that regard there. And Jeremy was talking about yesterday as far as splitting these cones into halves and quarters to find targets inside of them. And certainly can do that as well. So that's what we talked about, a very, very fast recap of yesterday. Now what I want to do is I want to talk about a couple different types of indicators. And let me point off indicators and markups and stuff like that, whatever. But let me point out there.
Question.
Yes, ma'am.
So in which time frame did you draw this trend line?
Well, let's take a look at that. So you can see now at the moment I'm on the 5-minute. Let's go to the 30-minute. There it is. There's that same trend line on the 30-minute. Understand, I marked it here. Where did I mark it? Let's see. Let me find my, oops, wrong thing. Let me find my points. Here's one point, here's the other point. They're hard to see, I imagine, on your side, but this is one point, this was the other point, and all this after it to the right coincides with it. So we can see it's on the 30-minute, it's on the 15, it's on the 5, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 times that line's been touched. The main thing to understand is we expect a reaction when we hit that trend line. Yes, I heard a question there.
So is it best to do your trend line on the lower time frame since you have the most detail?
You want to do a trend line where you have the most contact points. Now, it happened to be, when I looked at this chart, your eyes will learn to see this. That's the thing. And you do have to practice it a little bit, but your eyes will learn to see this. I looked up here and I saw this. And then I saw this. So I drew that trend line. And then I followed it to see, well, I'll be daggone, there it is again. So if we...
I get you want the most amount of contact points, but in addition to that, you want to have the most amount of detail to get the most amount of contact points. So as a strategy, does it make sense to do the trend line on the lower time frames?
I see what you're saying.
Yeah.
Yeah, I mean, remember that there's only a few things that are to the tick or to the penny. There are only a few things that are to the penny, and that's going to be your horizontal lines where you have high of day, high of pre-market, high of session, low of day, low of pre-market, that kind of thing. Those are the only things that are to the tick or to the penny, depending on what you're trading. Everything else, a trend line, for example, as you can see, here, we crossed it, and we crossed it. We rejected it. We crossed it rather substantially here. A lot of activity. So in this area here, there's a lot of chop. The only thing, in my opinion, that is to the tick or to the penny is going to be a horizontal line. Everything else is going to be an area as far as where we are right now. Now, as far as, do you say, well, should I go to the lower time frames to really line it up? I like to do that just to see. Anytime you can do something on a lower time frame, it gives you more detail than a higher time frame. But there are going to be times, huh?
So an additional question to that, the phrase of to the tick, we're looking at candles and not tick. Right? I know that they just added.
Well, for people that trade futures, we deal with ticks and handles, points and stuff like that. For people on equities, it's going to be pennies.
So would you switch this to looking at 10 ticks or?
Well, what I've got up here is the ES, so I'm looking at, no, I'm not talking about a tick chart. I'm on a 5-minute chart. If that's what we're talking about here, I'm not on a 10-tick chart. I'm on a 5-minute chart. When I'm talking about ticks, I'm talking about the fact that the ES, and let's just open this up. A little bit, there we are. There we go. All right, so the ES does things in quarters. So here's 56.85, 56.85 and a quarter, .5, .75, 86. We call each lines of these a tick movement. Notice I'm vertical here. I'm not doing by time. This is not a chart. So this is confusing if you don't use futures, which is part of the reason that I kept saying also to the penny. So if you're trading futures, we talk about price to the tick, not to be confused with a tick chart, a tick candle system. I'm not talking about tick candle systems. I'm talking about tick on the pricing. Now, if you're on equities, we'd say to the penny. Same concept. Same concept here. And matter of fact, I'll tell you what, let's go over to the Qs. And the reason I picked the ES over the Qs, all right, this is all our mess from yesterday, I guess. Golly. Let's clear this mess off. So when I'm over here on the Qs, I'm talking about to the penny instead of to the tick. If I'm on the the futures contract, then I'm talking about to the tick. But I understand the confusion where we talk about time frames are also can be measured in ticks. That's not what I'm talking about there. So my apologies if that was confusing. Does that clear it up?
It does.
Okay. So now let's talk about, but I'm glad you bring it up because if you spotted it, I'm sure other people spotted it as well. And especially since this is a recording and people won't have the opportunity to ask questions as easily in the recording, it's a good chance. It's good to clear it up now. All right. Today I want to jump into a couple different things that you'll hear other people talking about, and these are lines that you can put on your chart as well. And I want to point out, I'm going to start with volume profiles. Before I get into that, let me point out to you, the listener, just about everything I can throw on the chart gets hit. Make no mistake about it. I didn't mean to do that. I wanted this. And if I turn on this and I turn on, whoops, wrong way, this and this, as you can see, just taking a look here, I got all kinds of lines and all kinds of lines again. Here's a volume profile. Here's a pivot point, I think. There's ADRs in here. All these things get hit. They all do. But you can't have, I mean, you could have all of them on your chart, but it would drive you crazy. So you've got to pick things that make sense to you. You got to pick things that make sense to you. So for the moment, I'm just going to talk about what these are individually, and then you can decide which ones you want to add to your chart, if any. What did I just turn on? What have I got turned on? That's not what I want to do. I want to do volume profile first, because then we'll talk about TPO as well. Volume profile. Now, first of all, let me show you the settings here. This is a little bit harder to set up on TradingView, because TradingView has got 5 million volume profile things. And they got visible range, volume profile, this, that, and the other. This is a lot easier for me to do on Thinkorswim. Volume profile, what I'm showing here is, and let's just zoom in on this. What I'm showing here, this yellow line, is the price where more contracts were traded. I want you to listen to what I said, more contracts. So notice that the market opened down here. Blah, 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 blah. Dip down, go way up, come way down, go back up. But in the end, this yellow line is where the action was. This is where more contracts were traded here. So what does that mean? What a volume profile means, it is the price where people liked that price more than any other price, such that they traded more at this level. There are more contracts here than anywhere else in the day. Now notice this is volume by price as opposed to volume by time. What are we on? Equities. This is volume by time. Down here, this is volume by price. So now let's expand this. Let me back out. Okay. Let's expand just this day right here. Now this blue area is called the value. Well, this is actually the volume profile broken down. This yellow line is the definitive total winner. But these other lines show you the second place, third place, fourth place, and so on, if you will. So we could say that this zone right here, you see how this sticks out, we could say that this line right here is an area of interest. We could say that this area right here is an area of interest. And that, so we see that there's a lot of business being done here and here. And you could argue about some of these other areas as well. Now, the significance to this is often found in the prior days. This here is prior day. This is March 30, so this would have been Monday. So I want to run, I'm going to make a line right here. Let me edit this line. I'm going to make it nice and fat, and I'm going to make it like that, so it's very distinguishable. And now let's look and see what happened in the next day. In the next trading session, we hit it here, we hit it here, we hit it here. In the after-hour session, we hit it again. We've not hit it today. Well, actually we did, because we opened low and ran to close the gap. So we did hit it, but that was just, we just passed through it. Though do notice, and let me turn this off for just a moment. Well, try that again. Equity, show the volume. Let's click OK. Notice where it stopped. This morning, price opened low. It rushed to close the gap. Where did it stop? In that very, very first 5-minute candle, the volume profile from Monday. Today's Wednesday. Well, what about yesterday's volume profile? Well, let me duplicate Monday's line. Let's bring it up to Tuesday's line. Let's go back over to today and look at that. Right there it is. Actually, these are the same lines. This is from yesterday, just whatever. But the point is, look where it is. It's crawling all over yesterday's volume profile. Now, we call these lines for the daily here the point of control, POC. Now, some people will call them volume point of control, VPOC, volume point of control. Not to be confused necessarily with Signet's pre-market prep. His VPOC stands for virgin point of control, because in his definition it is a point of control from a prior day that has not been hit yet. So, for example, this in Signet's definition is a virgin point of control. So he would mark that forward because we haven't touched it yet. But this one here has been hit, so this would be a VPOC. This would just simply be a POC, point of control, as would this one just be a point of control.
When your VPOC in your definition has been hit, it's no longer valid, and you would then remove it.
Okay, so that's a very good question. So first of all, understand who. Now, when I say VPOC, I mean volume point of control. When Signet says it, he means virgin point of control. So for Signet, in Signet's definition, once we've hit it, we can ignore it, and that's fine. And I won't say ignore it, but it doesn't carry as much weight as it did before. On the other hand, when we talk about things like auction market theory, will say that it's still very much valid until we move
Which,
so far away. So when I say VPOC, I mean volume point of control, not virgin. It gets confusing because we got different definitions. And I say as long as we're near it, it's still on the board.
so would you potentially, in your definition, you would leave it, but if it's been crossed, potentially make it a different color?
I mean, if you want to, I mean, you certainly can. You certainly can do that. No harm and foul with that. The main thing to understand is the more time there is, a point of control loses its magnetism over time. Because people move on, the market moves on. So when we go back over here, let me just go back over here. Let me mark this for, I'm just going to use an arbitrary number. And just so that it's clearer to see, I'm going to take the value areas off. All we're going to see is the yellow lines. All right. Now, do I think that this VPOC, volume point of control over here, carries much weight? Well, actually, let's get the chart over here to where we are today. Excuse me. Here we are. This is today. Do I think that this VPOC carries much weight? No. Why not? It's too old. It's too old at this point. Everybody, we accepted a new price here. We accepted new prices here. We're accepting prices here. The market, this is auction market theory, for example, operates under the grocery store concept. When something goes on sale, people like to buy it. When something's priced too high, they're like, too high, not paying it. But something can also be too low, and the seller can say, that's too low, I'm not going to sell it for that. This is an auction. This is an auction to find the price that everybody likes the most. This price right now is simply too high. Nobody's willing to pay it. Nobody right now is willing to pay this price. Now, they may in time if we come back up to it. Certainly, but right now, this area here between 467 and 475 is the area where people are willing to spend their money. That's where we've got two volume profiles here, VPOCs, and that's the area that is most recent. They're close together. People really like it until they don't. What do I mean until they don't? Well, look at here. We had 2 days of just sitting right here. Then we had news on, let's see, it was Wednesday, Tuesday, Monday, Friday, something, I forgot what it was on Friday. My memory's that short. But here's something on Friday, and what happened was, they liked this price here until they didn't. Some news event came in and pushed the market.
You use the VPOCs in combination with the Fibonacci on the recent?
Using VPOCs with Fibonacci. I've never thought about that combination. Certainly you could try some chart markups and see. One of the things that we do sort of kind of, like I said, when I do volume profiles, let me just go back into this and let me turn the value areas on again. Or not the value, but the activity areas. So let's just look at the last couple of days. We see an activity level here. We hit it. A little small. That one really doesn't count. What would stand out to me is yesterday's VPOC. This area right here, maybe here, maybe here, maybe here, maybe here. And of course, this VPOC here, which we also did hit. Notice that the VPOC itself carries the most weight, and so we hit yesterday's VPOC, we hit Monday's VPOC, and Monday and Friday were standing right on top of one another. I guess that's Friday. The 28th, yeah. Now, can you put a Fibonacci on it? You could certainly experiment with it. The more people are more about, like if you listen to Signet's early morning broadcast, he will talk about the prior day pattern. For example, you see this is kind of like a capital B. You have a big top here and a big belly down here, indicating two distinct zones. As opposed to there'll be others that a lot of times you'll notice here that we have, this here looks like a D, right? It looks like a capital D. This looks like a B, and a lot of people assign all kinds of letters. This is nonsense. There's too many spots there to make anything out of it.
A lot because of the trending or the top.
I mean, I would mark all these levels, but I wouldn't categorize it as some kind of an alphabetical level. It's just got three major levels in it that, would I mark them? Sure, I would mark them. I don't think we've come back down to it, but let's just throw this in here real quick and just kind of see. So I'll mark that. I'll mark that. And I'll mark this because it doesn't carry forward. Let's mark yesterday. I'm going to mark this one also. I'm going to mark, okay, see that one's already the same. That was yesterday's VPOC, turned out to be a high level. This was Monday's VPOC, turned out to be a high level yesterday. Magnets. And we know all these are actually further down. Now, can we mark VPOC intraday? So the point being is that these are magnet areas. We expect price to gravitate towards them because it's a price that people really liked it. So let's take a look at this pre-market session here. We went from here down to here, back up to here, and to here. So these are, so again, different other ways that you can mark your chart up as far as targets go. Can you mark them intraday? Yes, you can. Let's take a look at that. Instead now of this being on the daily, I'm going to put it on the hourly. And I'm going to turn that off because it'll be a mess. Okay. Obviously, we have a lot more lines here, but let's just kind of take a look and see here we went to, well, this kind of stuff, the problem a lot of times with pre-market is it's steps. The steps are much shorter. It's slower to move, except right here, that's when news started coming through. But you can intraday possibly consider these ideas for intraday movements. Let's go to yesterday and see. Step up, step up, step up, hover, step up. Yeah, no, nothing dramatic here. As you can tell, they're not as useful intraday, but sometimes, especially if you've got a day where you have a reversal. I don't see a reversal here. There we go. So here we started here, we went up to here. Notice no VPOC up here. No POC, no point of, whatever. There's no point of control up here. What would that tell us? There's no interest. It's too high. People don't want to pay that price. Where do they come back to? Here. We chop here. What does this tell me then? It tells me that people like this price. So what happened? Well, we kind of went down. Where did we come back to? Right here. The price that everybody liked. How do I know that they really, really liked it? Because these lines are overlapping. This was the price that everybody liked. Let's put a square on that. Everybody kind of likes this price zone right there. So when price came out of it, where did it go? Right back to it. Why? Because they like this price. The sellers don't want to discount their prices anymore. Just like the buyers over here are not willing to pay anymore, the sellers are not willing to discount anymore. Why? Because they like this range right here until news or something like that happens and kicks them out, and it moves because of news. Does that make sense to everybody? We don't see any point of control up here. Why? Because it was just they ran up, they grabbed liquidity, but they could not hold it. Otherwise, there'd be a price bar up here. Or more of one, because when we move from here to here, but as we round it over, what does that tell us? That tells us they didn't like that price. They did not like that price at all. They tried to run it up, and they got rejected. They come back down in here. Everybody likes it. They said, well, let's try going short. And they tried going short, and people were like, we don't want to go short. So they came right back to here. And that's what you see on an oscillation day. But anyway, so that's a volume profile. Any final questions about volume profile? I want to get on to some of the other stuff too as well. And I want to get on to TPO.
What is the equivalent for this in TradingView? Any idea?
The challenge in TradingView is there's about 50,000 different ones. And there is one. Let me bring up TradingView real quick. Go away. Show me indicators. I'm going to pause this here. And matter of fact, I'm going to blow it up just so you guys, especially if you're in the video or whatever, or you can screenshot this right now. Visible range volume profile is built in to TradingView. Then you have got this KV for coins has got a very popular volume profile. Now, anything that Lux Algo does is usually very well received and respected. This guy's got a strong reputation in the thing. Lux Algo is a very popular guy. So you can screenshot this now if you want to, but you got to play with them. The problem with it is, for example, let me just pick visible range. So I've added that. So here's the, I believe this is the chart we're on, right? Let me just make sure I don't have any other volumes on here. Let me get rid of volume. Okay. So the challenge with visible range is it's what's displayed right now. Notice, see this pattern right here? See that there? See how it's changing? Now, let me move the chart. And it changes because it's what's displayed on the chart. And if I come way back over here, it changes again. So if you want to use visible range profile on trading view, what you need to do is you need to make sure that the left side of your screen, let's say you want to do it on the daily, then you want to make sure that you catch the left side of your screen at the start of the day up to the end of the day, and you'll get the correct profile. So it's up to us. Now, there are some settings that you can do in here. Visible range. Oh, wait. Let me hide that. So that's what's built in. Mm-hmm.
I like SVP HD.
Let's take a look. Say again.
Samuel Victor Paul HD. Session volume profile HD. Go backwards.
Session volume. Oh, I see it there. Okay, let's take a look at that. So let's turn this one off. Let me.
And then go look at the settings.
And I turn that one off here. Extend point of contact, point POC to the right. Sessions. So what you can do is you can load this multiple times. So you can load this multiple times. Set one for, well, they got it right here for the 3 markets. And then under style, can you set by market? I don't see it, but that's okay.
The volume high, you do it low, QC.
Okay.
Develop it.
Now let's see. Where is it? Let me turn that off. Let me turn this off. All right, where is that rascal? Did I do something wrong? Let's show the values. Reset. I don't know. I don't see it on my side. I've got a setting wrong or something. We can certainly, unless it's this number right here. Maybe it's that right there. Maybe that white number. Could be that white number right there.
Yeah, if you just turn everything on, it will pop in, and then you can exclude it. It's on each candle.
Say that again. It's on each candle?
Yeah, expand it out so you can see the candle. And then go into
Wait, my eyes are playing tricks on me. Go into the study.
and just click everything on. And
Click everything on. Okay. All right. And we can trim it back later and see. Okay. All right. So we got visible volume down here. We've got volume right here. Let me explain. I'm glad actually this came up. Developing point of control. A lot of times it'll say you're looking at the intraday point of control. Now, we use this a lot in Bookmap, and it'll say the volume profile right now is here for the day. Let's go look at that over here. And let me change that. Wrong thing. Here. Yeah. Now, that yellow line in Thinkorswim is where the point of control stands right now. Let me clear this off the chart, the manual drawings. So they're saying that the point of control right now is this solid yellow line, which happens to be the same point of control from yesterday, which tells me that we have not had enough volume today to move today's line. However, your software platform, meaning TradingView, Thinkorswim, Tradeovate, whatever, has to understand, you have to tell it when you're anchoring your point of control. For example, if you're trading equities like QQQ, I generally start my point of control time at 9:30 for the regular trading session. Some people will have the after hours point of control completely separate from the regular hours, and they'll consider them independent. Fine. However, some of your programs, though, like Tradeovate, do not look far enough back necessarily. If you're on a 1-minute chart, it will not look back far enough to establish the proper anchor point, because Tradeovate has a look back duration problem, limitations in it. And if you launch Bookmap, it only looks back 1 hour. Unless you kind of thing. So if you want to do volume profile trading using Bookmap, you need to start it running. If you're trading futures, you need to start it running at 6 p.m. Eastern when the market opens. Let it run all night long. Otherwise, the overnight, if you launch it at 9:30 in the morning, it can only look back to 8:30 that morning, which means that all that. Now, if you're just looking for regular trading hour volume, fine. Start it at 9:30, you're good. But if you are trading futures, you need to start your Bookmap at 6 p.m. Eastern when market opens to start collecting the data of the session, because Bookmap can only look back 1 hour. All right, does that make sense? Any questions? I know there's not a lot of show and tell on that. It was just kind of a monologue. But does everybody understand what I'm talking about here about your trading platforms? If you take Tradeovate and you set it to a 15-minute time chart, you're good. If you set it to a 1-minute time chart, candle, it cannot look back far enough a lot of times to figure out where the volume points of controls are, or the VWAP, the moving average VWAP. It can't figure that out either.
Marziti, I uploaded 2 images into the main chat.
Okay, let's take a look. Let me bring that over. Okay. 9:30 to 6. Okay, so you're doing the regular session, so on and so on and so on. Okay. And then the second one you uploaded was values, and you're showing all this here. Okay, I think the difference between us was I was doing all sessions.
Yeah, you need to play with it and stuff to make it do what you want. But I like it. It's on each chart if you put it up to.
Okay. So now, the way I typically like to do it, anyway, however you do it, you need, if you want to get into auction market theory, mark the prior day's volume point of controls. You can turn on the, I keep hitting the wrong thing. Day, turn that on to show me not just the point of control, but the peripheral areas around it, and then mark these heavy areas around it. How far out? Well, again, you don't need to mark this up here because you're nowhere close to it. Generally speaking, I like to mark, within about 3 days. So here's today's session. So I want to go back. I want to mark 1, 2, 3 days back. And I may mark these intermediate sessions like here. Oh, wait, I'm on. So starting from 3 days ago, I would mark here. Obviously, come here. I'm going to mark that. Mark that. Mark that. Here. See, these lines are already starting to double up. And as we look at what's happened today, you can see we've hit them. It stopped dead on one of them, blasted through another one, came up to yesterday's point of control, which is still today's point of control. And, it's still stuck here on the cues around, I can expect it to continuously come back to 472.50 until we have a news event that gives us a reason to go somewhere else. So, all right, so that's volume point of control. And there was a lot in there, and we spent a lot of time on that. So, that being the case, let me turn that off.
So the point of control is where the maximum transactions have happened.
Yes.
And where the volume has happened, and you could expect something around that same point in the future.
Yes, if you're close to it. If you're close to it, you can expect price to come back to it. Remember that these lines are areas. They're not to the penny. They're areas. So it's going to come back in that area. So when I have a line, just throwing a line here, I'm not saying that this, you have to remember that it's an area around that line. That was the area that people loved that price more than any other price in that area, kind of thing. So we expect it, just like, your favorite ice cream, Breyer's ice cream or Tillamook ice cream is on sale for $1.50. And you're like, I'm going to buy 5 of those. I'm going to buy 5 of those. It's normally $3. It's down here at $1.50. If they're willing to do it, I'm willing to buy it.
Bluebell.
Bluebell? Okay. All right. Now, notice I'm on the 5-minute here. Watch what happens. We're going to move on now to TPO. In the case of Trading View, I'm going to go up and where am I looking? Where am I looking? Here. To the candle. And I'm going to go to time, price, and opportunity. But theirs is a little bit different. I'll come back to that in a minute. In my case here, I'm going to use Thinkorswim. Trade-O-Vate has it. Works just fine in Trade-O-Vate. Here, in Thinkorswim, it's called monkey bars. Same thing. Monkey bars, now this is actually showing you volume profile on the left, TPO on the right. So it's a little bit weird looking. Notice it moved me to the daily summary. Now how TPO, time price opportunity, is the price where price action crossed more than any other. In other words, price went up and it came back down, crossed here, went down, came cross here, cross. It keeps crossing this price line. Doesn't necessarily mean it stopped, doesn't mean anything other than it kept crossing this price. And as you can see, we build out kind of a little bit of a triangle here. Let's just kind of zoom in on that. So what they're saying is this price right here yesterday, which was $525.91. Oh wait, which day am I in here? This is, oh good God, that's monthly. Sorry. Let's get down to the 30-minute. There we are. Yep, here we are. All right, this is today's price action. This is yesterday. This is Monday. This is Friday. Okay. Yesterday, this line right here, if I look to the right, I see 472.4. Price crossed that line more than any other time in any other place. I'm not saying that's where there was more business done. The most business was done at the volume point of control here. But price kept going up to here. And if we kind of put the two together, we'd say they were pushing it, wouldn't we? We'd say they push it up and it fell back down. And then they'd push it up and it fell back down. And push it up and fell back down, or something like that maybe. There's a whole study here, but essentially there's two ways that you look at this. Let me zoom in just a little bit more. Some charts use ABC, others use 1, 2, 3. This is kind of fuzzy. Let me see if I can do it better by first zooming into it here. Okay, yeah, that works better. TPO is done in 30-minute increments. Okay. 0's the open. But we kind of ignore that. 1 is 9:30. I'm in Eastern time here, 9:30 to 10. 2 is 10 to 10:30. 3 is 10:30 to 11. Now if I'm going to change the style for just a moment. I'm going to move to Monkey Bar Expanded, and this is going to make a little bit more sense.
I uploaded some more images for this too.
This doesn't make a lot of sense the way they've laid it out, but whatever. Oh, that's because they're carrying over. All right, in their case here, they're saying 8 is the 9:30. 9, 0. Okay, I understand what happened now in the other chart. 10, 1, 2, 3, 4 in white. This is a 30-minute candle chart, if you think about it. You don't see the wicks and the opens and closes, but you can see that for 30 minutes, for this 30 minutes, this is where price was. 30 minutes, this is where price was. 30 minutes, and so on. Okay, here is the 3:30 to 4 o'clock 30-minute slot. Now, if I squish all this and push everything to the left, if I push everything to the left, I get, where are you? That. I've pushed everything that I can to the left. If there's an open space, like right here, when the number 3 happened, there was nothing up here, and so it just came over all the way to the left. And when the number 5 time slot came open, price was up here, and there was nothing all the way to the left, so it just comes all to the left. So this is confusing. This is very confusing at first. I don't really care. All I care about is this line right here. And like volume profile, I may look for these other lines. So let's draw it in, and let's see what happens. So I'm going to put the TPO, and I'm going to color it blue. Or green. Sure, green. This is our volume profile and I'm going to color it yellow. Okay, now let's go to a chart that actually makes sense to us. Standard. Thinkorswim's having a fit, isn't it? We said that yesterday price kept crossing this line over and over and over and over. But the actual business was being done here on the yellow line. Well, what do we do today? We crossed it again. We hit both of them. So when we talk about TPO, think about, if you live in your neighborhood, in your house or whatever, and let's say when you go to your job, you drive your car, you cross certain intersections to get to your job. When you go to the grocery store, you get in your car, you drive, you're going to cross certain intersections. When you go to the gym, when you go to here, you go to there, you cross. Well, the question I would say is, what is the one intersection you have crossed more today than any other intersection? And that answer is this. And that's what TPO is all about. That's all it is. That's all it is. It's a target because it is a place where price continues to cross. Doesn't mean it does anything while it's there. It just means it crosses it. So it makes for a good target.
The images in the chat show it from trading views perspective.
Okay, let's bring that up. Okay, so thank you for bringing that up. So here we see laid out a little bit differently, and I'm sure you could tweak it some and different things like that. But this, these kind of things, intraday, huh?
Right, this is the volume footprint. There was two images. The other one was a PPM. There's two images the same.
Oh, side by side. Yeah. Okay, here's your volume footprint. This is your volume TPO. The other one was footprint. Yeah, I looked at it. I was like, I don't use TradingView that often. But the same idea. Here it is, right there. There it is, right there. And this looks, I'm going to presume this is probably the volume profile. So this is volume profile. This is TPO. Now, do I use these intraday? No. Why not? It's too much noise on the chart. I mark up my charts from yesterday, and I may have intraday volume on, but for the most part, I'm going to turn all this off, and I'm going to go back to my regularly usable candles. This is all for mark up the chart. And that's all we're doing is marking up the chart. That's what these two videos are about, is marking up the chart. So there is volume profile, and there is TPO. All right, I need to move on as we're approaching now my magical 1 hour mark. A couple other things I wanted to mention out as well. Any final thoughts or questions or comments? I didn't mark the previous days. I just marked this one here as an example, but you can mark the others as well. Okay. The next things, pivot points. Pivot points and pivot points are not things that you necessarily have to mark up. You can just turn them on and they're there. And you can color them and all the other kind of stuff there. Actually, I'm going to I'm going to put my pivot point study up instead of theirs because I've already got mine color coded. Okay. And let's clear the chart. Okay. Pivot points were created back in the 60s, 70s, 80s, 90s, whenever, I don't know. Back before we had a lot of computers. Before people actually had regular personal computers and smartphones and all that kind of stuff, the stock exchange boards only showed you the last 9 trades of a ticker. If you go up there and say, well, what's IBM doing today? Well, it only showed you the last 9, and it may have shown you the high and the low of the day. So traders that work the floor, because remember, nobody was trading from home necessarily. We didn't have the computers back then. So you had to go to the floor at the New York Stock Exchange to do this. Well, traders needed some kind of targets. We didn't have the whole concept of price action yet. They needed some ideas of targets, and they created this concept of pivot points. The central pivot point right here is the prior day's high plus low divided by 3. So we take yesterday's low plus its high plus its close price, add those together, divide by 3, and that is this line, the white line. And that is called the pivot point. Then they had other formulas for where the first resistance is, the second resistance, third resistance, and then the supports. And you'd say, well, why, now that we have computers and we have all this fancy technical analysis and stuff, would anybody use pivot points? Tradition. It's tradition. Same reason the stock market hours are still 9:30 to 4. Now, I know there's some move to change that. We've got a lot of stocks actually that trade now 24 hours a day, but generally we say market hours are 9:30 to 4 p.m. Eastern, even though we live in a global economy. And you got all the folks in the West Coast and all the folks in UK and Europe and whatnot are trading, and they have to get up at 2 o'clock in the morning to trade the American markets. But why is the market 9:30 to 4? Tradition. So because it's still tradition, people still trade by pivot points. And you will find that price will react to these pivot points. Let's go back to yesterday's. These pivot points here were calculated from the prior day. Here we are, pivot point. Pivot point resistance 1. And then nothing there. Let's go back to the prior day here. Support 2, support 1, and then the pivot point. Notice how it just chopped all around this pivot point S1. Go back another day. We opened below the pivot point, and here's pivot point resistance 1, or support 1, 2, 3. Notice the chop, especially on 3. Okay, they're still used. They're still targets. Now, so again, it's just tradition, and that's all it is, but people still use them. All right. Any questions about pivot points? Okay. The last one I want to put on is ADR. And you'll hear people like Signet and other people talking about ADR. Let me turn these on. There we are. The average daily range. Whoops, my pivot points are still turned on. Let's just get rid of them altogether. Average daily range. The average daily range is a 21 moving day average. 21 day average of, let's go to the daily candles for a moment. Well, that's hard to see. What we're going to do is we're going to count the previous 21 days, and we're going to average all their highs. So I'm going to average the high of the last 21 days, and I'm going to average the low of the last 21 days. And then I'm going to subtract the low from the high, and that gives me the ADR range. And so we can see, let's go back intraday here. Let me turn on the rest of those numbers here. We can see today's, I'm over here on the left. We can see that today's ADR is wider than yesterday. It's $9.7 because we're on the Qs. Hang on, let me get away from that. From the open, if we were to go half of that range up, we would have hit 471. If we'd have hit half that ADR down, we would have hit 461 and a quarter, which is basically the open. We'll call it 10 wider. So if I take the open minus 5 and the open plus 5, and that's an ADR. Now, if the ADR should, however, just run like a scalded dog in one direction, then we would say it would run 10 points or $10 roughly in one direction from the open. Well, let's take a look. Here is the ADR half from the open, and look what happened. We stalled right there. See that? Let's look at yesterday. I think I got yesterday's on here. Let's bring it down. Okay. Price opened here on the left, went up, hit half of the ADR right there. Look at the next day, prior day. Price opened here, went down, didn't make support, but it did make resistance 1. Price opened, support 1, support 2, and then stalled on support 2. Again, like I say, remember that a lot now here, this is completely went nowhere. Didn't hit resistance, didn't hit support. Happens. And then finally, opened, support 1. See how we kind of stalled a little. I mean, granted, we stalled here. We stepped down. We stalled here. And then we just kind of lingered on for the rest of the day. So again, you can have all these different kinds of targets. The key is, as we wind this down, is to pick things that make sense to you, that when you look at the chart, these things make sense to you. That's the only thing I want you to see is, well, what makes sense to me? There's all kinds of targets out here. Yes.
There's another image for the indicator and trading.
There. Okay. The ultimate ADR price alerts. Do what? I'm sorry, I was talking at the same time. What'd you say?
No, I was saying the same thing.
Okay. So generally the main thing that you would have control over the ADR is, do you want to change the average? The typical average is 21 days. Any rate, all right. There's all kinds of targets. The problem with all these targets, you can't put them all on the chart because it'll be an absolute mess. But I hope that between yesterday showing you trend lines, supply and demand kind of stuff, pricing levels, today we talked about indicator kind of stuff that you can put on there to give you some price levels and things like that. That kind of gives you some ideas of how to mark up your charts. One last thing I will show you. I'm not going to talk about it much. You should know what it is. All right. First of all, what did I just put on the screen? What is it? Moving averages. Nothing more. Nothing more. Moving averages. I know, you thought I was tricking you. They're just moving averages. Notice I use a red, green, blue for my first. This is my 8 period, my 21 period, my 50 period is in blue. Then I go to yellow and dark red, being the 100 and the 200. People use these as well, but obviously these are dynamic. But there's a whole system of studying how these moving averages move, like when the 8-minute crosses the 21, or the 21 crosses the 50, or whatever, of trading strategies on there. That's all kinds of strategies. But again, these are dynamic labels. And then we have VWAP. Good old-fashioned VWAP. VWAP, oops, I didn't mean to do that. VWAP starts at the beginning of market session. For equities, that is 12, 1 o'clock, whatever time it is. So for equities, starts right here, gets readjusted every day, starts at 0. VWAP, which is this purple line. And as a matter of fact, let's just leave it on there by itself. There's VWAP. That purple line stands for volume weighted average price. So it's sort of like volume profile times excuse me, I said that wrong, completely wrong. Not volume profile, volume by time. Equities here. This. It is the amount of volume times the price as we move along, and they average it out. It's a formula to give you this line. This is, now the one nice thing about VWAP, it is a moving average that is the absolute same place on any and all times. In other words, right here at this particular moment, it is $471.81, $471. If I go to the 30-minute chart, it is $471.80 some odd whatever cents. It's the same, because it has nothing to do with what time you're looking at it, what time interval. But there is a lot to be said about this guy. However, what I do want to point out is the start of day. I was talking about this earlier. I'm actually putting it up here now. If you use Trade-O-Vate, sometimes TradingView, or other types of brokers and so forth, some of them do not look back to the right time to start to zero out the VWAP for the day. And so if you look at it on 3 different brokerages, it'll be in different places on all 3 of them. You're like, well, which one is right? And you have to figure out, well, which one is right? In the case of Thinkorswim, it's usually right. So I use this as my standard here. Thinkorswim is my standard. And then I go over here and I look and say, maybe TradingView. We're looking at the MES. And let's add, wait, did I have, no, I don't, okay. VWAP, volume weighted average price. And let's turn everything else off. And they're saying that, let's see, and we were on the Qs, weren't we? And they're saying it is 472 even. 472 even. 471.82. I'm splitting hairs there a little bit. splitting hairs. I'm not going to argue with that one. But I can promise you if you go into trade ovate, it'll be wrong most of the time. So, because you have to go back and start the calculation. On equities, we start the calculation at midnight. On futures, we start the calculation at 6 p.m. Eastern. Right here is when we start VWAP calculations. So different platforms get it, some get it right, some don't. So just stuff to remember. All right. Oh gosh, hour and 15 minutes in this. Gone over even my normal time. Any wind down questions? Any questions before we move on to anything? Before we wind this down? I hope this is yeah.
I just uploaded another image because I use EMA a lot. This EMA ribbon lets you set up to 8 periods, and you can turn the periods on or off and style them. So I just use this all the time.
There's a strategy called the EMA ribbon cross, and it has to do with the which is it? I think it's the
6, the 9, 20, and the 50.
Yeah, the EMA ribbon cross strategy only uses 2. It can use 3, but it generally uses 2. I may actually have it. Let's see. Still set up. Give me 1 second. It'll be one of my studies. No, I don't see it. No, my studies always start, if it was a custom study that I did, all my studies start with an underscore. But let's just go back and take a look at, here. Let's see if it's this. I don't think it's going to be, no, it's not it. It's not that one. Maybe it's this other one. Come here. Get over there. Okay, 50 in the 200. And the idea, oh, wow. Okay, I didn't plan on that either. The EMA ribbon study that I'm familiar with, basically, you plot, I think it's the 13 versus the 34, and you're looking for price to dip inside the ribbon for your entry. But if the price crosses the ribbon, it's a stop, that kind of stuff. There's a strategy based on it I've seen before. I'll have to see if I can dig it up again. But it was quite interesting. But it had to do a lot with ribbon flipping. When you'd see the 13 would flip over the 34, stuff like that. That would give you trading signals and so on. But at any rate, yeah. All this, again, if you understand it, if it works for you, fine. There's a guy that his total strategy was based on VWAP. He took all right, let me get this off the screen. See, that would drive me nuts. But you can work with it, and that's fine. But you see here, this VWAP here, there was a guy that he had a 10% success rate. Did you hear me on that? 10% success rate. His strategy was trading crossover when price crossed the VWAP. But his home runs outpaced his one home run outperformed his 9 losers. That he was a 6K trader, $100,000 plus year trader, 6-figure trader. Now, I couldn't live with a 90% failure rate. I couldn't do it, but it worked for him. Everybody's got something else. In the end, like I say, what do you see? And that's all I care about. I lay this up here and I say, what do you see? And that's what you're supposed to work on. Questions, thoughts, comments before we wind this down? Going once, twice, sold. You guys have a good one. I hope this helps. And we'll see you let's see, today's Wednesday, Signet streaming today. Y'all make sure to show up for him. Signet's always good. Talk to you guys later. Bye.